Hey guys, what's up? How's it going? My name is Rob and welcome back to week number 82 of the dividend investing case study on this YouTube channel. Now in today's video, I'll give you guys an update on the portfolio, I'll show you guys how my stocks have been doing, and I'll give you guys a quick little overview of the brand new stock portfolio that we've been creating and kind of growing over time on this channel. Now keep in mind, we did start this channel, this channel and the portfolio way back in the beginning of 2020, and every single week I basically have been posting these updates to show you guys how easy it is to get started with investing in good quality dividend stocks. And we've really seen these stocks kind of compound and grow over time, so it's been really fun. And I just want to say once again, thank you for everybody who watches the videos, supports the channel, and continues to come back. It's really cool. It's been a lot of fun. And in today's video, I'll show you guys how our stocks are doing. Alright, so let's talk about the portfolios really quickly. So we have the TFSA, which is the main one we first started on this channel. Once the TFSA kind of got to the point where it was getting close to max, we started a personal account. So we'll cover the personal account second. Let's go over the TFSA really quickly. So over the past days since this morning, the TFSA is up $119. That's just under 0% or so. So Wealthsimple Trade rounds it out, but still a little bit of growth over the past day, over the past week. Pretty straight for the most part, with once again a tiny bit of growth, up $137. And over the past month, the portfolio is up 2%, which is $576 in total. The past 3 months, where most of our growth came from, $1,649. And over the past year inside the portfolio, basically it is July 11th when we first started this portfolio. Or actually not July 11th when we first started it, but a year ago it was July 11th or so. Portfolio was about gains looked like about just a couple $100, and now we're up 19%, which is $5,000. So quite a bit of gains over the past year, and all time once again it's close to that 19% range, which I think is the highest it's ever been on this channel since doing these updates. And it just keeps growing, like that compoundingness of these dividend growth stocks just keep growing over time. So that's the TFSA. Let's take a peek at the personal account, which is once again the main account we're focusing on now. So we should see more or less the same thing. Past day is up 2%, which is $118. Past week is up once again 2%. Past month is closer to 2%. Past 3 months is 4%. So once again, a little bit of consistent growth. And over the past year, this portfolio, we originally started it in, I can actually check here, in April 17th was the first day we deposited $250. So from April 17th to now, we are up about $220, which is 4%, pretty decent. Doesn't seem as impressive as the TFSA, but that's just because it's less money and less time for it to grow. So before we go any further in the video, I just want to say really quickly guys, if you guys are enjoying this video and you guys want to help out the channel, be sure to smash the like button. It really helps me out and it helps the video get out to more people on YouTube. And if you guys want to follow alongside and be notified of when these videos go live on the channel, be sure to subscribe and click the bell, because then you'll get a notification and YouTube will show you when my videos go live. And the other thing I want to mention really quickly is Wealthsimple Trade is currently offering 2 free stocks for anybody who opens an account with Wealthsimple Trade and deposits money. Check the links in the description of this video if you guys want to help me out with that as well. So the main stock I'm going to be focusing on today is going to be a stock I've talked about quite a bit on this channel, and it's going to be one of the ones we already hold. So I'm just going to kind of double down for 2 reasons. Number 1, I do believe this is a good stock, and number 2, it is one of the lowest holdings in my portfolio, so I want to bring it up just a little bit, and that's going to be TELUS. So TELUS is a telecommunications company, one of the bigger companies in Canada. It's got a pretty good history of growth here. If we go over the max, I'm just looking this up on Google here, we can see that the company has been consistently growing, and it actually has a pretty good dividend yield. So the ticker, if you guys aren't familiar, is going to be T on the TSX, and it's currently trading at $27, just under $28 Canadian, and all-time high it's up 163%, which has just been consistent growth since it came basically started trading, it looks like, in about 2000. And that dividend yield is pretty good, sitting at 4.54%. So if you're looking for a nice established dividend company that's also growing, pretty consistently, TELUS is definitely a company to look at. So let's kind of look at some other things. Let's look at the return, and let's talk more about why I like TELUS. So one of the big things I always look at when it comes to assessing a stock, especially a dividend stock, is the company growing over time? Are they increasing their revenue? Is that stock price growing? And we've seen with TELUS, for the most part, they are increasing their revenue pretty consistently on a yearly basis, and their stock price is kind of slowly growing over time. That's what I want to see. Now, the second thing I want to look at is the dividends growing over time, because if we're going to be investing long term, we really want those dividends to compound. And yes, we can reinvest those dividends and that'll grow, but one of the big things a lot of people don't really look at, especially if you're a beginner, is the growth rate of the company. So are they, basically how much on an annual basis are they growing that dividend? So we can see here, this is my go-to website. I use Guru Focus to kind of just quickly see for some companies, what their annual growth rate is. And you can see like 5 years, 10 years, and 5 years is probably the most important. However, 10 years, if you can see a company is increasing their dividend for the past 10 years at a pretty good rate, that's good as well, because more history gives us a better indicator of how well the company is going to do. And the past 5 years, we can see that TELUS has grown their annual dividend growth rate by 7%. So that basically means every single year, whatever you're getting in dividends, that's going to grow automatically by 7%. You don't have to do anything, it's going to grow. So your money is growing by 7% per year by doing nothing. So that's pretty good. I would say anything above 5% is pretty good. I look for about 10% or so, but 7% is pretty solid at the end of the day. And we can see here that's exactly where TELUS sits. And their actual 10-year growth rate is around 9%. So a little bit of a decrease over the past little while, but still 7% is pretty solid. And that's one big thing I want to look at. Now, the other thing I want to talk about really quickly that kind of goes with this is going to be the payout ratio of TELUS. So we're going to take a peek at the payout ratio here. And the payout ratio is basically telling us how much of their earnings are they paying out in a dividend. So lower the payout ratio, the more money they have to spend, the more likely they'll be able to, kind of protect themselves in event of like a crisis or a pandemic, as we've seen, kind of thing. And it also gives them the chance in the future to grow that dividend. If a company has a very, very low payout ratio, they're going to be able to aggressively grow that dividend, while a company that has a higher PE ratio might be like, you know what, we need that extra cash, we're going to choose not to grow that dividend. They might even cut it, or they'll just have smaller increases. So I always like to look for companies with lower payout ratios. Now, the interesting thing about TELUS is they actually have a very high payout ratio, and that's mostly because of the fact that their earnings have kind of flatlined a little bit over the past few years, but they are one of the biggest telecommunications company. So they have that kind of secured business, and they are kind of expanding and increasing new networks and whatnot. So I do believe in the future, this company will continue to do well just because of the fact that, it is such a big player in the field, and, people are going to need their phones. They're going to need their phone plans. And once the pandemic kind of goes away, people will have some more money to spend. So we've seen the pandemic kind of be a little bit hard on the stock, but nonetheless, they've done well. And I think over the next couple of years, we should see the company continue to do well, even though it does have a payout ratio, a high payout ratio. So inside my Wealthsimple Trade personal account, we're going to go here and I'll show you guys basically what I'll be doing is I'll be buying some ETFs. I'm going to be buying about $100 of TELUS. Like I mentioned earlier, that's going to be the main stock I'm going to focus on. And it is the lowest stock inside my portfolio. I currently have about $200 worth of TELUS, and it's currently up about 4.53%. So not too bad. It's actually been one of my better growing stocks as of lately. So we're going here. We'll go inside the personal account, and we are going to buy about $100 worth of TELUS or so. We'll put that about 4 shares or so, ends up being 100. We'll buy TELUS, put that through, and once again, the ticker for TELUS is going to be T, so just type that into Wealthsimple Trade, and TELUS should pop up. Now, the other thing we're going to be focusing on is going to be the ETFs. I always like to buy ETFs just to be stable, and we have about $80 to buy an ETF, so we could buy VDY is probably going to be the one we're going to be focusing on. We have VDY and VFE as the big ETFs inside my portfolio here. VDY is basically, once again, that Canadian High Dividend Yield Index, has all the big Canadian dividend companies. Just more security inside the portfolio. So we'll buy 1 share of VDY, and then we'll keep the rest of the money for maybe another day to buy some stocks. But that's going to be the main ETF I'm going to be focusing on today, and that's going to be all the stocks that I'm buying inside my personal account. And before we end the video, let's take a quick little peek about the monthly income of the portfolio. So let's take a peek at the dividend growth. Let's take a peek at last month and see how much dividends we got, and let's see how much dividends we got so far for the month of July. So here's the dividend income from inside the portfolio since we first started investing. I know some of you guys have mentioned that I should change around the spreadsheet, and I am going to work on doing that. I know it's not the best. I just kind of threw this really together really quickly, so I will be changing this and kind of cleaning it up over the next little while. But basically, you guys can just see how the dividend income has grown over time inside the portfolio. We started with just a couple bucks, and then it's been consistently growing. And we finished June at about $88, just shy of under $100. So that was a new high. I mean, not a new high for us, but it was a pretty good month. And July, we're already at $7 in dividends, and that is slowly growing as time goes on. And I do suspect July should probably be a pretty good month. And I got this cool little chart so you guys can see, so more you guys are more visually oriented people can see how the dividends have grown since we first started investing. You can see the first month here, and it's just been consistently growing. Some months, we get a little bit of ups, a little bit of downs, but it generally trends upwards. And every single time we get a little bit of a dip, it goes back up, because remember, some stocks pay quarterly, some pay monthly and whatnot. So that's kind of how that works. But once again, that consistent money compounding and growing and being reinvested inside the portfolio is key to growth with these types of stocks. Before we end the video really quick, I just want to say, kind of answer a viewer's question that I've got on the channel before. So somebody asked me on this channel, and I've actually been asked this a few times, is why do I pick TD Bank stock as one of my main holdings, and why don't I actually hold any of the other Canadian banks? So the main reason why I do this is because I actually hold an ETF called VDY, and this represents, as I kind of showed you guys earlier, the big portion of the Canadian dividend stocks inside my portfolio. So the thing about VDY is it actually holds about 60% of its weight, 50 to 60% in financial services, and pretty much the bulk of those financial services are the Canadian banks. So when you buy VDY, or when I buy VDY, I'm basically buying Bank of Montreal, I'm buying RBC, I'm buying CIBC, I'm buying, you know, all those different banks. So the reason why I don't hold individual bank stocks is because I already have them to a pretty decent degree in VDY, and then I buy TD because I'd like to double down on TD because it really is one of my favorite dividend stocks. So I want to have a little bit more holding inside my portfolio. So hopefully that answers your question. And at the end of the day, all the bank stocks are pretty good. So don't worry about, you know, picking one, you know, kind of take a peek at them, pick the best one you like, but they're all good investments in my opinion. Okay, so that's it for today's video. I hope you guys enjoyed it. Let me know what you guys think in the comments. And if you guys have any questions or anything like that, feel free to drop them in the comment section. I'll try to get back to you guys as quickly as possible. So thanks for watching. Hope you guys enjoyed the video. Take care, and I'll see you guys later.